What's up, Graham? It's Guys here. So I think it goes without saying that throughout the last year, there has been a tremendous mainstream push towards the adoption of cryptocurrency that's helped push prices to new levels which I never thought were imaginable, but here we are today. In the last 12 months, Bitcoin has rallied from $6,700 to $60,000. Ethereum rose from $136 to almost $2,000 at its peak. Dogecoin pumped from 0.1% all the way up to 8 cents. For the longest time, I have been rather dismissive of cryptocurrency in general. But I will admit that over time, my opinion has changed, and the more I've looked into it, the more I began to see the real-world use cases and how one day it could be a global, decentralized store of value. So a few months ago, I made the decision to place 1% of my entire portfolio into a mix of 60% Bitcoin and 40% Ethereum. However, there is a problem. Even though I've addressed my thoughts on Bitcoin and why that makes up over half of my cryptocurrency investment, I've yet to share my thoughts on Ethereum and address the claims that one day it could reach as high as $10,500. Because really, when it comes down to it, Ethereum is the second largest cryptocurrency with a market cap of almost $200 billion. And that's worth diving into further and discussing why I've invested in this and where I think it might lead in the future. So first, we should really explain what Ethereum is, because I have the feeling a lot of people just go and see it as a less expensive Bitcoin. Or maybe they think it's just a faster way to buy things. But really, both of those descriptions couldn't be further from the truth in terms of actually understanding why Ethereum has such a strong mainstream popularity. Now, the concept of Ethereum was first created in 2013 by then 19-year-old Vitalik Buterin, who created it as a way to facilitate programmable contracts using its own currency. And yes, I do realize that sounds insanely confusing, so I'll break it down even further. On the one hand, we have Bitcoin, which is largely seen as a decentralized store of value and a digital currency that replaces the money that we use day to day. This concept is fairly easy to understand, and when most people begin thinking of a cashless digital currency that anyone could send around the world, they at least begin to partially understand kind of what it does. But Ethereum is a lot more intricate than that. The creation of Ethereum all begins with replacing the intermediary between what we do and how our information is processed. Like, for example, when you're watching this video that I made for you, YouTube is the intermediary between us. Or if you go and buy a vintage Blockbuster tape from a seller in Crescent City, eBay is the intermediary. But by having an intermediary, you are trusting that company with your information, and they control how that information is presented. Ethereum, on the other hand, is built on the same blockchain network as Bitcoin, except it allows for an open source platform where programmers could build applications that facilitate the exchange of money, content, property, or anything of value in the form of what's called a smart contract. This is a digital agreement that performs a certain task when certain conditions are met. Like, if you smash the like button, that button will turn blue. It really just removes the middleman and allows certain tasks to happen in real time without any human involvement. The thought is, this creates more trust between parties because there are no gray areas. You know what the contract is ahead of time. The contract doesn't take any sides. It just does what both people agree on, and that's it. So in this case, Ethereum is really just the network that programs are built on, and Ether is the currency that powers it. Kind of like if Ethereum is a car, then Ether is the gas that powers the car. This gas was never really meant to be an investment in and of itself, but instead, Ethereum was meant to be a completely decentralized peer-to-peer network on a level playing field, with Ether being the currency that powers it. Now, unlike Bitcoin, which is limited to 21 million coins in existence and that's it, Ethereum is potentially infinite with a limit of 18 million new coins every year. However, the expectation is that over time, more programs and services are going to be available on the Ethereum network. And as more adoption takes place, the price of Ethereum will begin rising alongside with it. So now with that out of the way, here's why I decided to invest in Ethereum and where I think it might go in the future. Now let me get this out of the way because I feel like this is an important distinction. When I'm talking about my cryptocurrency investments, I'm buying in a relatively small amount compared to my overall portfolio. What initially started off as me investing 1% of my net worth into crypto has now grown to more like 2.5% thanks to a combination of the prices going up and me buying in a little bit more here and there. But make no mistake, this is still a very small part of my portfolio, and I'm fully prepared to have everything come crashing down 90% just because Elon Musk randomly tweets the price is too high. But regardless of that, jokes aside, when I made the decision to begin allocating a small part of my portfolio to cryptocurrency split between 60% Bitcoin and 40% Ethereum, I made that with the expectation of what both of these are capable of doing long term. In terms of Bitcoin, I felt like there was something to be said about the value from the network effect of mass adoption, and that the more people treat it like a store of value, the more valuable it becomes as an alternative asset. There's also no shortage of companies out there willing to treat Bitcoin as an alternative to gold. For example, Tesla now now putting $1.5 billion of their reserves in Bitcoin or accepting Bitcoin as payment for their cars, PayPal allowing users to exchange in Bitcoin, and a multitude of other businesses who have followed suit. I tend to agree with the argument that the more Bitcoin grows, the less risky and volatile it becomes. And as the billionaire Bill Mayer says, Bitcoin's total supply is growing less than 2% a year, and it's obvious by the price that the demand is growing much faster than that. It also makes sense that alongside that, there's likely to be renewed confidence in other cryptocurrencies as well. People who have never been exposed to them in the past may now feel more comfortable holding on to, using, and exchanging cryptocurrencies as a store of value. And alongside mass adoption, it makes sense that more interest is to follow. In terms of Ethereum though, here's my take on it. Bitcoin right now is like the mainstream Goliath that probably isn't going anywhere. Almost anytime you hear about cryptocurrency or a new all-time high or a new price collapse, most of the time they're referring to Bitcoin. But Ethereum, on the other hand, is a much more practical and functional use case, much beyond just a currency. The Ethereum network is almost like running its own business, with multiple functions and applications and programs built on top of it. And in terms of how it's evolving, I feel like there's space to hold it alongside Bitcoin in a portfolio. I also like that it's different than Bitcoin. They're not competing against one another, and they both have drastically different goals. Ethereum is not meant to be a store of value or investment per se, even though it certainly can be. Instead, I think there's way more potential for actual use cases in the future for anything when it comes to mortgages, banking, debt, loans, or anything else where a contract would help simplify those transactions. Even DocuSign is beginning to look into the practical applications of making this a reality. So given the differences between the two, one having a store of value and the other having a much more practical use case, I decided to split that initial 1% investment between 60% Bitcoin, 40% Ethereum, and since then I've continued that. But just like there are downsides, there's also the potential for a lot of upside. Like, relatively speaking, cryptocurrency is still fairly new, and if you were to go and ask random people what they thought Ethereum was, they would probably tell you it's a chemical from a Marvel movie. That means there's still a lot of room for further adoption and more awareness, which would help boost prices. I also believe that as more people trust and hold on to Bitcoin, the skeptical sentiment around cryptocurrency in general will begin to fade, and that in turn will help rise the tide for everything else. Fundstrat Global even predicted a $10,500 price target for Ethereum, given its potential to one day be able to process transactions much like MasterCard or Visa. They say that decentralized finance would allow us to borrow, lend, and spend money through smart contracts instantaneously without the use of banks. And sure, if that happens, that could absolutely boost Ethereum prices. And do I think that's going to happen anytime soon? Well, probably not. And a lot would have to happen first in order for that to become a reality, so I'm not counting on it. But it does give us a good idea in terms of where the potential is and where this one day might evolve. We've also all seen the boom of NFTs or digital artwork all transacted on the Ethereum blockchain. That allows creators to sell verifiable pieces to those who want to buy and own them. And even though the market is a free-for-all right now, selling at exorbitant prices, I'm sure over time that could turn into a very legitimate marketplace for both artists and creators. However, nothing is guaranteed, and that's worth taking into consideration. So overall, I'm very optimistic about both Bitcoin and Ethereum, which is why I decided to split my investment 60-40 between